Hello again, everybody. Dwayne here from DRFX Forex Swing Trading. Now, this recent trade that was made on the pound Canadian dollar highlighted one of the most important factors when it comes to successfully trading the currency market. This has to do with the holding period for our trades. Now, one of the most important things that we can do when it comes to trading is to establish a particular holding period for our trades. And this is a way of anchoring our expectations and ensuring that we do not hold out for more than the market is actually offering us for that particular trade. This allows us to maximize on the amount of pips that we can make on a particular trade while minimizing the the risk of sharp pullbacks that can easily and quickly take away our trading gains and possibly even lead to losses. So this is one of the most important aspects of trading that I'm going to highlight with this recent trade on the pound Canadian dollar. Now, as you'll recall from this trade, the original target for this trade was 160 pips. Now, just to remind you of the general aspects of this trade, this was a range setup that was on the 4-hour chart of this pair. The market had reached this resistance area and entry took place just below this area here, with the expectation that the market was going to head back to the support target. Now, the original target was set at 2.0090, just above the support area, which would have captured 160 pips. However, at the end of the holding period that I established for this type of trade, the market had not yet reached that target. So, in obeying that holding period rule, I exited this trade for 102 pips. Less than 160 pips that was the original target, but a strong gain nevertheless. Now, when it comes to trading the market and when it comes to the 5 trading strategies that I use, each of them has their own particular holding period that has to be obeyed when it comes to trading them across the currency market. As I said before, this is important because various trading strategies and various trading patterns across the currency market take a particular amount of time to hit their targets. So trends and consolidation breakouts take a particular number of days to hit their target on average, while trades within consolidation boundaries normally take a different time period. So knowing the amount of time to hold out for these particular types of trades is very important so that we avoid situations in which we're up 150 pips or 200 pips or even maybe 300 pips. And in trying to hold out for more, the market we can get caught up in a situation in which the market sharply takes away our trading gains within a very short time, within a few minutes or within a few hours. So there's nothing more frustrating than seeing our large floating profit suddenly turn into a trading loss within a very short time. So this frustration can be easily minimized and avoided by identifying the number of days or the particular time period that a particular trade needs to take or usually does take before the target is hit. And once you incorporate that into your trading strategy, then you're going to be able to avoid those situations on a lot more easily. So, as I said before, the trading strategies that I use, each of them has their particular holding period. And the trade the trade that was done on the pound Canadian dollar is a type of trade in which we're trading within consolidation, but the using the support and resistance boundaries for our entry points. So that particular trade or this particular trade has its own trading period and holding period that has to be obeyed. In this case, it is 2 days. As you can see here from this trade sheet, after I've analyzed the market and analyzed the trade and ensured that the trade conforms to the checklist and the parameters and guidelines for this particular trade. The last thing and the most important thing is to establish a holding period. So 2 days was set as the maximum period for this type of trade, and at the end of that period, this was the exit that took place. Now, many persons, and in the past, I would have been very tempted to hold out for more, given the fact that we were very close to the support boundary, and 50 pips or close to 60 pips would have been available if we were to hold out for more. So that would have been, that is generally the thinking that we have when it comes to exiting our trades. Seeing where the market has come close to our target, and we generally are tempted to believe that, all right, we just need to hold out for a little bit longer, and maybe this pullback that is taking place is temporary, and that within a very short time we're actually going to be hitting our target. Now, that type of thinking is one of the traps that can get us into problems. And as you can see here, with what took place eventually, this sharp reversal is one of the consequences of that sort of thinking. Had I held out for more or longer period than the 2-day holding period rule, this would have been what I would have faced. A sharp reversal that would have taken away all of these gains and would have carried me back to my entry point. The stop loss would still be holding, but as you can see here, right now we're in a situation in which it is possible that the market could actually break out instead of reversing and coming back down to support. So these are the type of situations that you can avoid. And given the fact that the market generally produces these sharp reversals once it has hit its target or come very close to its target, then you need to have rules in place to avoid these situations. So this is a typical example of what we face when it comes to trading and knowing and uncertainty or the challenge as to how long to hold our trades for. You have to ensure that you set a particular holding period for your particular trade and stick with it. Obey it at all times, regardless of how much you're going to be actually getting from the trade, because invariably these are the type of situations that will take place, and that can be very frustrating for us. So trading can be profitable, but when it comes to trading over the short term and over the long term, you have to be consistent in terms of the rules that you establish for yourself and that you obey. So continue to apply this rule when it comes to your trading, and you'll find that you will be you'll have a greater peace of mind when it comes to exiting your trades, and you'll find that your profitability will definitely increase and will be less affected by these situations. So until then, take care.